If you made it to the end of the
Suzu clip, thank you, and I hope I helped you and you learned something from this clip. Don't forget to like, share, subscribe. Cryptocurrency. It's the buzzword of the investing world these days. But what is cryptocurrency? Have you ever heard of Bitcoin, Dogecoin, Litecoin, XRP, or Ethereum? No, they're not embarrassing 90s rock band names. They are actually types of cryptocurrencies, aka digital money. And they're trending everywhere you look, but the million-dollar, crypto, question here is, should you invest in cryptocurrencies? Despite what every loudmouth on the internet screams at you from their digital soapbox, buying cryptocurrencies is not a safe bet for your investment future. But we'll get to that in a minute. Let's unpack what in the world crypto is first. From this Clio video you will learn 1. What is cryptocurrency? 2. Best trading platforms. 3. How are cryptocurrencies created? 4. How does cryptocurrency work? 5. How do you store your cryptocurrency? 6. What types of cryptocurrencies are there? 7. What can you buy with cryptocurrencies? 8. Crypto prices. 9. Several countries recognize digital assets. 10. What cryptocurrencies should I know about and why is it making people rich? 11. Is cryptocurrency a good investment? 4 things to know. 12. Mining electricity. Bitcoin's hash rate doubles. What is cryptocurrency? Cryptocurrency is like regular currency, but completely digital. Cryptocurrency comes in many forms, purposes and uses. The simplest way to look at cryptocurrency is a form of stored value, money, that is not owed to governments or central agencies such as banks, states or companies. All records of its creation and when it is sent or received are stored in a kind of large digital ledger that anyone can access, keeping it honest. It cannot be stolen or confiscated and can be used anywhere in the world. Cryptocurrencies make it possible to borrow, sell, buy or lend without an identity, credit score or even a bank. As investors fret after the recent surge in their digital currencies, cryptocurrency prices fluctuated on Monday. At the time of publication, only one of the top 10 cryptocurrencies was trading. What is cryptocurrency? Cryptocurrency is a type of digital asset that is an intangible digital currency that uses a highly sophisticated type of encryption called cryptography to secure and verify transactions, as well as to control the creation of new units of currency. It is designed to function as a decentralized medium of exchange, independent of a financial institution or any other central authority. Although Bitcoin is the most well-known cryptocurrency, it is not the only one. Other major types of cryptocurrencies include Ethereum, Ripple, Bitcoin Cash, and Litecoin. There are other digital assets, or cryptocoins. These are commonly referred to as digital currencies. For example, a company may initiate a coin sale or coin launch, which is otherwise commonly referred to as an initial coin offering, ICO. In an ICO, a company creates a new product and wants to build a user base that will benefit from purchasing the product early. ICO also allows the company to raise revenue for product development. It is attractive to companies because they can bypass the rigorous and regulated process of raising capital required by venture capitalists or banks. While this FAQ does not further explore ICOs or coins, entities are encouraged to consult with their legal, accounting, and tax advisors given the complexity and significant regulatory debates surrounding such digital assets. How are cryptocurrencies created? The process of creating a new type of cryptocurrency requires either building a new blockchain or modifying an existing process to create a new variant or fork. Most of these so-called altcoins are forks of the Bitcoin protocol. The only way more coins can be created from an existing cryptocurrency is through a process called mining, where the miner is given a transaction fee, a new coin, in exchange for contributing to the underlying blockchain algorithm, being the first to solve a cryptographic puzzle. Mining is highly competitive and requires significant computing power. Some cryptocurrencies, such as Bitcoin, have a limited supply, meaning that there is a maximum number of coins that will ever be in circulation. Others have no maximum cap, but limit the number of new coins that can be generated each year. How does cryptocurrency work? Cryptocurrencies are exchanged from person to person over the web without an intermediary such as a bank or government. It's like the wild, wild west of the digital world, but there's no law enforcement marshal, as mentioned, cryptocurrency is an integral part of the blockchain. Distributed ledger technology is built on consensus algorithms that regulate the creation of new blocks. All participants in the P2P network must agree to a block for it to be recorded in the blockchain. There are several types of consensus with POW, proof of work, POS, proof of stake. DPS, delegated proof of stake, and POA, proof of authority. Among the most popular, cryptocurrency is issued every time a new block is created and is used as a reward and incentive for blockchain participants who participate in the consensus mechanism in closing blocks, i.e. allocating their processing power, coin stakes and other resources to support transparency and trust of the blockchain and to verify new blocks. Bitcoin was created for this purpose. Here's what we mean. Have you ever hired a kid in your neighborhood to mow your lawn or watch your dog while you were out of town? Chances are you'll pay them in cash. There was no need to go to the bank to make an official transaction. This is what it's like to trade cryptocurrencies. They are decentralized, meaning no government or bank controls how they are made, what their value is, or how they are exchanged. Because of this, cryptocurrencies are worth whatever people are willing to pay or exchange for them. Yeah, it's pretty wild. It was a mixed week of trading in the digital asset markets. After a modest pullback, a bullish weekend saw Bitcoin, BTC, recover to end the week down 1%. Still just below the key psychological price level of $50,000, Ethereum, ETH, and Cardano, ADA, the second and third largest assets on the brave new coin market table, ended the week down 1% and 5% respectively. The best performing assets in the top 40 last week were Tezos, XTZ, and Solana, SOL, which appreciated 62% and 31% respectively. Bitcoin had a strong weekend up $2,000 between Friday and Sunday. The bullish move was in response to Fed Chairman Jerome Powell's push for tighter short-term policy during his speech at the Jackson Hole Symposium for U.S. Central Bankers. Soviet monetary policy means a looser and more aggressive monetary policy that encourages an increase in the money supply, leading to lower interest rates to encourage investment. Powell's statement sent the dollar lower and prices higher in riskier markets. With more money in the economy, the resulting increase in liquidity encourages investment in riskier speculative assets such as BTC. Bitcoin, BTC, is currently trading near the psychologically significant $50,000 mark. Using the daily charts, if BTC breaks above $50,000, traders will find the next major resistance at $61,000 on the daily charts. However, the first support level falls to $45,000 and the second support level appears to be $41,000. The world's flagship digital asset is currently trading at $47,929, down 1.51% in the last 24 hours and down 4.45% in the last 7 days, according to CoinMarketCap.com. The advantages of cryptocurrencies are as follows: decentralization. The main argument in favor of cryptocurrencies is their underlying technology, blockchain. This makes cryptocurrency independent of any authority and makes it so that no one can dictate the rules for cryptocurrency developers and owners. One of the core tenets of decentralized finance is that it is, well, decentralized. Take Bitcoin, for example. The original crypto asset is basically a ledger, its blockchain, that is decentralized because transactions are recorded in databases on many different computers. That unique record, stored in many databases, is secured with cryptography, and computers watch each other to make sure it hasn't been tampered with. Fast and unlimited transactions with fiat money take a significant amount of time to process and settle. Your business will end up waiting days to receive money. With cryptocurrency, you can create an unlimited number of transactions and send it almost instantly to anyone with a crypto wallet. Anywhere in the world, low transaction fees. Banks and other financial institutions charge considerable transaction fees. This does not mean that you do not have to pay a fee for cryptocurrency transactions. However, the amount you have to pay is relatively small, internationally accepted. The sender and recipient of funds can be in different parts of the world and still exchange cryptocurrencies. You can save money on currency conversion and fees that always accompany international fund transactions, transparency and anonymity. Due to the distributed nature of blockchains, every transaction is recorded and the records are immune to alteration. At the same time, if a crypto address is not publicly confirmed, no one will know who made a transaction and who received the cryptocurrency. All of the above should make companies think more seriously about how to make a cryptocurrency. However, there are some drawbacks that you should consider. The disadvantages of cryptocurrencies are limited acceptance. Countries are very hesitant to support any cryptocurrency. In everyday life, there are still limited possibilities for those who want to make purchases with cryptocurrencies. So instead of asking how to create a cryptocurrency, people are more often asking how to use cryptocurrency. High volatility. Very often, users who are thinking about how to get started with cryptocurrency forget about one important factor: high volatility. The cryptocurrency market is not stable, with frequent ups and downs even for famous cryptocurrencies like Bitcoin. It is very risky to invest in cryptocurrencies because you never know whether it will be a profitable investment or not. Transactions are irreversible. Mistaking an incorrect cryptocurrency address can cost you money. There is no way to reverse a transaction. You can submit a refund request, but if it's denied, be prepared to say goodbye to your money. Cryptocurrency storage. You've probably read horror stories about cryptocurrency owners who lost their devices, forgot their private key, and couldn't access their cryptocurrency holdings. Such situations can happen to anyone, so anyone can lose their money accidentally. These benefits and drawbacks should be considered when considering how to create a cryptocurrency that will facilitate your business goals. You need to decide what the purpose of creating cryptocurrency is for your company. How do you store your cryptocurrency? Stay with us, we're about to get pretty techie here. You store your cryptocurrency in something called a digital wallet, eToro, usually in an app or through the seller where you buy your coins. The wallet gives you a private key, a unique code you enter to digitally sign out of your purchases. It is a mathematical proof that the exchange was legitimate, with us so far. Good. Because we're about to get even further into the weeds of technology, cryptocurrencies use something called blockchain technology. A blockchain is like a very long receipt that keeps growing with every crypto exchange. It is a public record of all transactions that have ever taken place in a particular cryptocurrency. Yes, it looks like it's straight out of the Matrix. Think of it as a ledger showing the history of that coin. What types of cryptocurrencies are there? Bitcoin is the top dog that everyone knows about. But it's not the only type of cryptocurrency out there. There is Litecoin, Polkadot, Chainlink, Mooncoin, and, only about 10,000 other oddly named coin types are climbing the ranks. Bitcoin, yes, it is the household name that most people think of when you talk about cryptocurrency. That's because it was the first cryptocurrency and has been around for a while. Bitcoin was created in 2009 by an unknown person who goes by the secret name Satoshi Nakamoto, whoever that is. And that big secret is part of its underground feel that people like. But there's no denying that everything anonymous is super shady. Even though the cryptocurrency is rocky, crypto investors seem to like Bitcoin because they think it has a little more power than the rest. It is also rated much higher than its competitors. For now, Ethereum, this is the next most popular cryptocurrency after Bitcoin. And even though Ethereum is like Bitcoin with its cryptocurrencies, called Ether, it's also a bit different. Ethereum is a bit more complex as it allows its users to mine their coins. What this means, in the crypto world, mining happens when people use their computers to solve super complicated math problems that ensure new crypto transactions are correct, which adds to the blockchain. These people who mine are then paid in, you guessed it, Ether coins. Dogecoin, pronounced Dogecoin, started as a joke in 2013 and is now the hottest thing to invest in. At the time, there was a meme going around about a Shiba Inu, that's a type of dog. The creators of Dogecoin named their cryptocurrency after the Doge meme, it became their mascot, and the rest is internet history. Oh, we're serious. You can't make this stuff up, so all this to say. There is no shortage of coins to invest in out there in the cryptocurrency land. And depending on what's trending that day, Dogecoin, anyone, you'll see the value of these coins go up and down, like one of those rocking pirate ship rides at a carnival. If you follow cryptocurrencies based on what's hot that day, you'll probably get sick yourself, just like you would from that carnival ride. What can you buy with cryptocurrencies? Right now, most people still see cryptocurrencies as an investment. But cryptocurrency is quickly gaining speed and becoming more widely accepted as a currency. And that could become even more popular as these cryptocurrencies continue to gain trust. Some major retailers, such as Whole Foods, Nordstrom, Etsy, Expedia, and PayPal, now allow people to pay using crypto. And of course, any two people who appreciate the coins can exchange them for goods or services. And let's not forget the whole cryptocurrency digital art craze called NFTs, where you buy digital art with digital money, but that's another story for another day. Crypto prices, as of Sunday 12 o'clock August 29th, here are the prices of the top 10 cryptocurrencies. Bitcoin, BTC, $48,439. Ethereum, ETH, $3,203, Cardano, ADA, $2.83, Binance Coin, BNB, $488.07, Tether, USDT, $1, Ripple, XRP, $1.14, Dogecoin, Doge, 28 cents, USD Coin, USDC, $1 US, Solana, SOL, $92.71, Polkadot, DOT, $26.06, current DeFi volume is $13.81 billion, or 15.18% of the global 24-hour crypto market volume. As mentioned, the only gainer in the top 10 was Solana, SOL, now the 8th largest cryptocurrency. Despite Bitcoin's modest decline, Solana, on the other hand, performed well. Solana is now changing hands at $99.26, up 5.31% in 24 hours and an impressive 34.99% over the past week. FOMO is alive and well in the world of cryptocurrencies. With lesser-known coins once again beating industry giants Bitcoin and Ether following recent surges, more countries recognize digital assets. According to the Cuban government, cryptocurrencies will be recognized and regulated as payment methods on the island. As a result, Cuba's central bank will create rules for such currencies and choose how to license related service providers in Cuba. Japan's largest brokerage has started offering subscriptions to an upscale Italian meal delivery service where customers can use coins to buy and exchange dishes as their value changes. After neighboring El Salvador became the first country to legalize Bitcoin. At the same time, Bitcoin backers in Honduras were hoping to boost demand for the virtual asset by opening the country's first ATM this week. Indeed, the International Monetary Fund, IMF, is concerned about the growing number of nations, such as El Salvador, that have begun to recognize Bitcoin as their national currency and how this may influence their global operations. Another example, Solana. Solana price traded an ADH of $101.92 according to CoinMarketCap just 4 hours ago. This price point marks the first time the SOL token has traded triple digits since launch. This price point puts the SOL market cap above $29 billion. However, this event may not be a token burn event, as previous SOL burn events have not seen specialized teasers from the Solana team, August 31st to October 8th, highlighting that it could be an event for decentralized app developers or non-fungible coin, NFT, creators and not coin burnings. SOL has been trending upward over the past 4 weeks, appreciating about 266% from of $27.82 a month ago to currently stand at $101.92 at the time of writing. The reason for the massive price appreciation in such a short period of time is due to a number of factors that include the U.S. Securities and Exchange Commission, SEC, registration of a Solana-focused fund for institutional investors. Cryptocurrency market data network company PYTH will go live on the Solana blockchain and Solana's successful venture into non-fungible tokens, NFT, this month with the launch of Degenerate Apes. Bitcoin network continues to strengthen as hash rate doubles since June. China's crackdown on Bitcoin mining has undoubtedly caused more disruptions to the BTC network, with miners forced to shut down their machines and move out of the region to continue their business. the nationwide ban on mines has had its consequences. With more than half of all Bitcoin miners living in China at the time, the BTC hash rate fell by more than 60% to a one-year low in June. About 2 months later, however, the situation changed, and the hash rate increased by about 100%. China caused disruption to Bitcoin. Hash rate, computing power, is a critical security value on the Bitcoin blockchain. An increased hash rate means greater security, therefore the network is more resistant to attacks and vice versa. In July, a reported shortage of miners triggered 4 consecutive negative mining revisions for the first time in about 10 years. As designed by Satoshi Nakamoto, the Bitcoin protocol readjusts to be harder or lighter every 2016 blocks, depending on the number of miners and computing power on the blockchain at the time of the adjustment. What cryptocurrencies should I know about and why is it making people rich? You've no doubt heard of Bitcoin and Dogecoin. This is primarily because the two currencies have gone from money value to kind, much more than that in a short period of time. These coins are among two of the most popular for internet users because they are well known and many people are invested in them. Which means they get the most memes and articles made about them. This does not mean that they are necessarily the best form of crypto overall or necessarily have the most inherent value. They're just the most popular, which in the crypto world is kind of what gives them value. There are actually thousands of cryptocurrencies, just as there are thousands of currencies used in countries around the world. Some people have become very rich because cryptocurrencies fluctuate in value like a stock. In 2010, Bitcoin was worth pennies on the dollar when it first appeared and now averages around $60,000 per coin. As the demand for Bitcoin increases and its supply decreases, basic economics dictate that its value increases as a result. However, they fall in value almost as fast as they rise, which attracts day traders to crypto. Is cryptocurrency a good investment? 4 things to know. Before you say goodbye to dollars and hello to Bitcoin, Ether or Doge, there are a few things you need to know from the start. Cryptocurrency is unstable, it's true. Crypto has a temper as hot as a 12-year-old's. Its value goes up, only to crash back down, and you never really know what you're going to get each day. The value of cryptocurrencies goes through extreme ups and downs. There's no denying that some are very hot right now, but for how long? Someone sneezes and the price drops. Investing in cryptocurrencies is risky to say the least, but here's a crazy thing. A recent study by PeopleSay shows that 50% of Americans believe investing in cryptocurrencies is safe. 50%, cryptocurrency is definitely not a safe thing, it carries a huge risk. Let's be real here, all investments come with some level of risk. But why jump all the way with something so high and low? Cryptocurrency has a lot of unknowns. There is still a lot to be worked out about how cryptocurrencies work. Think, nobody even knows who the founder of Bitcoin is. Only a small percentage of people in the world really understand the system and know how to operate it. Ignorance makes you vulnerable. We always tell people that if you can't explain your investments to a 10-year-old, you have no business investing in them in the first place. You're setting yourself up for a big mess. Cryptocurrency facilitates fraud. It only takes 5 minutes on the internet to know that not everyone has your best interests at heart. Scammers will stop at nothing to gain access to your personal information, passwords, even your bank account. And guess what? Cryptocurrency makes them much easier. Now look, we're not saying that everyone who uses cryptocurrency is a bad guy who avoids the government and does shady black market transactions. But if someone wanted to commit a crime and fly under the radar without being tracked, cryptocurrency will call their name. Cryptocurrencies have an unproven rate of return. Cryptocurrency trading is kind of like gambling. Because it is changed from one person to another. Without any real regulations, there is no pattern to the rise and fall of its value. You can't figure out changes or calculate returns like you can with growth mutual funds. There simply isn't enough data or enough credibility to create a long-term cryptocurrency investment plan. Mining electricity, Bitcoin's hash rate doubles, the mining sector has started to recover from the Chinese crackdown. Many miners have already migrated to other friendlier regions such as Europe and the United States to resume their operations. Thus, they reduced China's dominance in the field and made the Bitcoin network more decentralized. Year to date, the hash rate has doubled since the June low. Data from ByteInfoCharts shows that computing power on the network has returned to over 130 GH/s. A 100% increase from the lowest levels of around 67 GH/s recorded 2 months ago. China declares further crypto crackdown as North American Bitcoin miner earnings hit record figures. The Chinese government continued to warn against trading and investing in cryptocurrencies as part of its nationwide crackdown. An official from the country's central bank has said that Bitcoin and other digital assets are not legal tender and have no value. Since the ban on crypto mining in China, North American Bitcoin miners have benefited from an increased market share. A Chinese central bank official reiterated the risks cryptocurrencies pose to its citizens and warned the public to stay away from the digital asset market to protect their capital. While China's crackdown on crypto mining has depressed prices, it has also opened up opportunities for the sector to grow in other jurisdictions. As part of the Chinese government's plan to eliminate the use of cryptocurrencies in the country, Deputy Director of the People's Bank of China, PBOC, Financial Consumer Protection Bureau, Yin Yuping, said that the new asset class is nothing more than investment speculation. He also warned the public to stay away from any transactions related to digital assets. Local municipalities, including Yinjiang County, have also taken steps to stop crypto-related activities. County regulators have asked hydro plants to cut off power to Bitcoin miners in the area. The move follows a large number of miners being pulled out of operations in May, which caused prices to crash as miners rushed to sell their digital assets. As a result, miners outside of China had an opportunity to grow. North American mining companies saw an increase in demand for facility hosting space as they began to occupy a larger portion of the Bitcoin network as Chinese miners increasingly went offline. If you made it to the end of the Alexandru clip, thank you, and I hope I helped you and you learned something from this clip. Don't forget to like, share, subscribe.